Bitcoin is surging, blasting toward its all-time high, and everyone thinks they know why. The headlines are screaming about ETF inflows and maybe some vague political shifts, tying this explosive price action to the usual market forces, but they're missing the real story. Welcome to the Money Blueprint, and I am your host Michael. Today I am joined by my co-host Maya.
Hi everyone! The truth is, this rally isn't just another crypto bull run. The headlines are focused on the symptoms, but the real earthquake is a massive behind-the-scenes shift in United States policy that is quietly setting the stage for crypto's total integration. This isn't just about price charts, it's about a fundamental rewiring of finance and technology. In this video, we're going to break down what's really happening, why it changes everything for companies like SpaceX and OpenAI, and what it means for you.
For years, the story of crypto in the United States was one of regulatory confusion. A patchwork of rules and a hostile stance from key agencies created a chilling effect, leaving innovators and institutions stuck on the sidelines. But in 2025, the vibe completely changed. We are now seeing a major shift in the government's approach to digital assets.
This new era was kicked off by a clear change in direction from the Trump administration, which has loudly championed the goal of making America the crypto capital of the world. This isn't just talk. On January 23, 2025, President Trump signed an executive order to establish regulatory clarity for crypto. This order created a new presidential working group on digital asset markets to overhaul existing rules. It also led to the SEC creating its own crypto task force, signaling a new, more collaborative approach.
Then, in a move that sent shockwaves through the financial world, the administration established a strategic Bitcoin reserve on March 6, 2025. This means the US government is now officially holding on to its seized Bitcoin, estimated to be over 200,000 coins, as a long-term strategic asset, much like gold. For the first time, the United States is officially hodling Bitcoin, treating it as a store of value on a national level. This action, combined with the SEC rescinding the Restrictive Staff Accounting Bulletin 121, SAB 121, has signaled to the market that the days of regulatory ambiguity are ending. A clear, pro-innovation framework is emerging, and it's the single biggest reason for the confidence flooding back into the market.
This new administrative tone is being matched by real action in Congress, which is laying the legislative groundwork for crypto to become a part of everyday American life. The most significant development is the Financial Innovation and Technology for the 21st Century Act, or FIT21E. This
isn't some minor tweak. It's a foundational bill designed to finally provide clear rules for the digital asset market. The main goal of FIT21 is to solve one of the biggest headaches that has held back the industry, figuring out which agency regulates what. The bill clearly divides responsibility between the SEC and the CFTC, creating a defined pathway for crypto projects to operate without fear of surprise enforcement actions. After passing the House with significant bipartisan support in the previous Congress, the bill is now seen as a top priority.
This legislative push is a game changer. It provides the clarity and common sense rules that businesses have been begging for. And it's not happening in a vacuum. House leaders have dubbed the week starting July 14th as Crypto Week, signaling a focused push to pass landmark legislation for stablecoins and overall market structure. This coordinated effort between the White House and Congress is creating a clear runway for innovation.
So, what happens when the most powerful government in the world signals a green light? The biggest players on Wall Street take notice. This new policy environment has been the primary catalyst for the huge wave of institutional money we've seen pour into Bitcoin.
The most obvious sign of this is the incredible success of spot Bitcoin ETFs. Since their approval, these funds, run by giants like BlackRock and Fidelity, have become the main way for large-scale institutional investment. They have been relentlessly buying up Bitcoin, with inflows hitting a massive $14 billion since April 2025 alone. Year-to-date, spot Bitcoin ETFs have seen over $14.5 billion in net inflows. This shows an insatiable appetite from institutional clients who now see Bitcoin as a legitimate, long-term asset for their portfolios. The market is seeing sustained structural buying that simply wasn't possible in the old regulatory climate.
The momentum is undeniable. One report noted that Bitcoin ETFs recorded over $602 million in inflows on a single day in July, a clear sign of investor confidence. Analysts from major banks like Standard Chartered are now openly stating they expect Bitcoin to hit new all-time highs, with some predicting prices of $135,000 in the third quarter, and even $200,000 by the end of the year. The message is clear. The regulatory risk is fading and the institutional capital is just getting started.
If you're getting value from this deep dive into what's really moving the markets, and you want to stay ahead of the curve on the biggest trends in finance and technology, do me a favor and hit that subscribe button. We go beyond the headlines to give you the analysis you need to understand this new economy.
This brings us back to SpaceX and OpenAI. Why does this policy shift in Washington change the game for them specifically? Because it systematically removes the very barriers that would have made a deep integration of crypto unthinkable just a few years ago.
Let's start with SpaceX. Elon Musk already laid the groundwork. Tesla's purchase of Bitcoin was the famous precedent, a test run that proved a major corporation could hold Bitcoin on its balance sheet. But at the time, it was a maverick move loaded with regulatory and accounting risks. Now, the landscape is completely different. The establishment of a strategic Bitcoin reserve by the US government lends massive credibility to the idea of holding Bitcoin as a reserve asset. The rescission of accounting roadblocks like SAB 121 and the legislative clarity from FIT 21 provide clearer accounting standards. For a company like SpaceX, which is on the cutting edge of technology and has significant cash reserves, the path to diversifying its treasury into Bitcoin is now de-risked and clarified. It's no longer a wild gamble. It's a logical, strategic financial decision to hedge against inflation and position for a digital future. The policy shift has turned what was once a rebellious act into a prudent one.
Now for OpenAI, the connection is less obvious, but potentially even more profound. The biggest constraint on the growth of artificial intelligence is energy. Training and running large language models requires a staggering amount of electricity. A single ChatGPT query can use 1,000 times more electricity than a Google search. This is where the synergy with Bitcoin mining becomes incredibly powerful.
Bitcoin miners are unique energy consumers. They are mobile, they can turn on or off instantly, and they hunt for the cheapest power on the planet, which is often stranded or excess renewable energy. By co-locating AI data centers with Bitcoin mining operations, companies like OpenAI could help solve their energy problem. Miners can absorb excess energy from wind and solar farms, stabilizing the grid and making renewable projects more economically viable. This, in turn, provides a stable, low-cost source of power for the energy-hungry AI servers.
A pro-innovation policy environment in the US that supports both AI and Bitcoin makes this kind of large-scale, synergistic infrastructure investment not just possible, but highly attractive.
When you zoom out, what we're seeing is more than just a rally in Bitcoin's price. It's a strategic move by the United States to secure its leadership position in the next generation of finance and technology. For years, the US risked fumbling its lead as other countries created more welcoming environments for crypto innovation.
The policy shift of 2025 is a deliberate and aggressive course correction. It's a statement that the future of digital assets will be built in America. By creating a clear, supportive, and predictable regulatory framework, the US is not just inviting capital and companies back, it's aiming to become the undisputed global hub for the entire digital asset ecosystem. This isn't a crypto takeover in the sense of replacing the dollar, but rather an integration of this new technology into the heart of the American economy, ensuring the nation remains at the forefront of financial innovation for decades to come.
So while the headlines might fixate on the price, the real story of Bitcoin's recent surge is the quiet revolution happening in the halls of power. It's not about hype, it's about policy. A monumental shift in the US government's stance, solidified by executive orders, the creation of a strategic Bitcoin reserve and a clear legislative agenda, has fundamentally de-risked crypto for the world's biggest players. This new foundation is what makes it not just possible but probable that tech giants like SpaceX and OpenAI will integrate Bitcoin and blockchain technology into their core strategies. The game has truly changed. We are moving from an era of speculation into an era of infrastructure and integration. What do you think? Is this the beginning of crypto's total integration into the mainstream, or are there still major hurdles ahead? And which company will be the next to make a big Bitcoin move? Let me know your thoughts in the comments below. We would like to thank you for watching the Money Blueprint, and we will see you on our next video.